We live.
What is up, family?
What's going on, everybody? Another
How everybody
Sunday.
doing? Yes, another Sunday. Another opportunity to learn, get better. I'm excited for this one.
Yeah, this one new. This something that I can't even, if y'all have any questions, you're going to have to redirect them because I don't know very much about futures. I know, kind of what they are. Never traded them, never thought about trading them. I've heard a lot about it. I've seen some other people have their little courses and, stuff like that I really don't know nothing about. So this should be good, man.
Okay. And see, I know a little something. I paper trade, There's a couple cousins out here doing their thing. Shout out Tim, Lex, P-Dub. There's a couple of them doing their thing with futures that I follow. So, but I'm excited to get the basics. You know what I'm saying? We got to introduce the family to the basics.
Facts. That's a fact. That's how we always do it. How do you make a cake? You got to get the flour. You got to get the sugar, the eggs, the milk. Like, that's what we come with on Sunday. We coming with the bare groceries. We not coming with the cake to your house already. You feel me? But hold up. You said you've been paper trading futures?
I've been paper trading, bro. I've been dabbling. I've been paper trading.
You told me that before?
No, because it's been recent.
Recent, huh?
Yeah, real recent.
Too recent to let me know that's the type of time you was on. Because when I learn something, I'll be trying to put you on game. AJ, I learned about these NFTs.
First of all, listen, I ain't there yet. Listen, I'm trying to, get a strategy together. I'm trying to figure this thing out. So you can listen. Feel free to join me because that's my goal. That's my objective for 2022.
So you gonna tell me live on YouTube? I should feel free to join you now.
Bro, I ain't that far. Listen, I ain't saved. Don't think.
It's all
don't
good.
Think I got a strategy. And yeah, bro. I'm practicing. I'm playing. I'm trying to understand ticks, points. So I'm here to learn tonight.
I believe you. But that's why we got Candace here. That's why we got Candace here. She gonna give us the game. She gonna tell us, you feel me, just the basics, what they are, how to do them. She might throw a little extra sauce in there. I don't know. I'm not gonna spoil it. You feel me? Candace, you ready for the people? You ready? You gotta pull it up ready?
Yes. Can y'all see it?
Let me see. No, we can't see it yet.
Let me watch my mouth.
Just stop sharing, but yeah, you could go ahead and pull it up. No rush. You feel me? You are a guest.
What about right now?
Listen, we just appreciate you. No, not yet. We waiting for it.
No, now we see you. We don't see the presentation though.
Hey y'all.
I love it. That's dedication. You know what I'm saying? You out and about and you still showing up for what your assignment was that you agreed to. I love it.
Yeah, everybody can't say that. Everybody can't talk opinions.
Everybody can't say.
She said, I didn't think she was gonna show up. I said, hey, I don't know what to think. You know what I mean?
He said, you got my word.
But, right. I done heard a lot of words before though. I can't take just cousin's words no more. I like actions. And she showed up. Oh.
Period. She was on time, ready.
Sure.
So we definitely appreciate her. Everybody, y'all make sure y'all give her love in the chat.
I'm trying to understand why it's not. Bear with me, guys, through technical difficulties.
It's all good. They need to sharpen their pencils. That little smudge that you've been having on your screen for the past 2 weeks. Go ahead and wipe that off right now. Get you a paper towel. Get you some water. Hit one of these. You feel me? Wipe that off. You know what I'm saying? That little stain, that ketchup stain you had next to your trackpad on your laptop, clean that off too. It's nasty.
Not the ketchup stain. Okay, we rocking and rolling.
All right, so we got the Zoom screen. You see that? We got the home screen. There go that part, but you got to do the browser one.
What's going on? Oh my gosh.
It's okay.
Okay, I see what's going on. There's a delay. There's a delay. Oh darn. Okay.
Yes. Hit them top 3 dots in the right and open it in your browser.
Oh yeah, so we can see it.
Yeah, we gonna get official with it. Here we go.
There
Beautiful.
we go.
Feel me?
The floor is yours.
All right. Good
Cut.
afternoon, everyone. Thank you for joining Against Kansas. And I'm just going to give a brief introduction on the futures market. All right. So let's just get started. Futures are a type of derivative contract. Okay, futures are a type of derivative contract agreement to buy or sell a specific commodity, asset, or security at a set future date for a set price. Future contracts, or simply futures, are traded on futures exchanges like the CME Group and require a brokerage account that's approved to trade futures. Futures versus options. A futures contract involves both a buyer and a seller, similar to an options contract. Unlike options, which can become worthless at expiration, when a futures contract expires, the buyer is obligated to buy and receive the underlying asset, and the seller of the futures contract is obligated to provide and deliver the underlying asset. All right, so I just did a brief little comparison of options and futures. So as many of us know, or us with less than $25,000 in our account, when we trade options, when we do 3 trades that are round trip, meaning that you open and close it within 5 trading days, we will get what is referred to as a pattern day trader violation. So when you trade options, when you trade futures, that is not the case. You can take as many trades as your capital will allow. I wouldn't recommend that you go out willy-nilly with the trades, but you can, as long as you have the money in your account. Now with options, your loss is capped at the initial investment. So if you put in $1,000 and the contract expires without reaching your strike, you're out of that $1,000. But if you put in a trade with the future and, let's say you have $2,000 in your account and you are trading something, let's say you're trading in the NASDAQ, and you're going to hear a little more about this in a few minutes. So the NASDAQ, it moves 20 points, $20 per point. So if you have $2,000 in your account and you lose more, or the trade turns against you more than 100 points, you're going to blow your account. You're more than likely going to get a margin violation, which is different depending on your brokerage, but yeah. And if you don't stop that trade, you can lose money infinitely, depending on how fast the market is moving and where it stops, if that makes sense. I hope so. Okay, so you can only trade options during the New York session. So that's from actually less shorter than the New York session. The New York session starts at 8 a.m. and we start trading options at 9:30. So with futures, you can trade them 23 hours a day. And like I was stating previously, you may choose to exercise or not exercise your options contract. But with the futures contract, if you hold it through the expiration date, you have to exercise that contract. All right. So I pulled up the NinjaTrader margin requirements to give you guys an idea of the difference between how you would finance a futures trade versus trading an option. So we see the first thing under equity indexes is the EMD. Second thing is the ES or the S&P. As you can see, the E-mini S&P. So the intraday margin is $500. That means during the time from 9:30 a.m. Eastern time until 4:45 Eastern time, you have to have at least $500 in your account to trade one contract of the S&P. Now, anytime outside of that 9:30 to 4:45 time, you need $11,880. Right now, the market is so volatile, they are actually requiring double that. So, yeah. And then you see right underneath that there is something called an MES. So that is similar to the E-mini S&P. It's just, it gives people with less capital an opportunity to participate in the futures market. So where you see you will need $500 in your account to trade the S&P, you only need $50 to trade the micro. So, and the maintenance initial margin is going to be $1,188. So if you look at those numbers, you see a relationship. It is 10% of what you would get. And what you will earn is also 10%. So 1 point on the E-mini S&P is $50, which I'm going to elaborate on in a minute as well. But 1 point with the micro is $5. All right. So you can see with the NASDAQ, you will need $1,000 to trade one contract, $16,500 after hours. With the Russell, $500 during the New York session, $6,050 initial margin, and so on and so forth. All right, now let's look at the options chain, something most of us are very familiar with. All right, so we see an options chain. Now, if I wanted to put a put on this 430, this SPY 430 expiring March 18th, I would need between $786 to $790. So you can see the difference. It depends on the contract and the expiration date with the options chain. And with futures, you get a standard margin requirement. All right. Shout out to the DMV. Thanks for the support, guys. I love y'all. All right. So now we're going to look at the type of futures that we can trade. Some of them. This is not an exhaustive list. So like I was just reading, you can trade financial futures, you can trade currency, and you can trade commodities. Commodities can be metals, can be which are silver, gold, things of that nature. You can, wheat is a commodity, corn is a commodity, and so is oil. So for the financials, which we commonly refer to as the indexes or the indices, we have the E-mini S&P 500 or the ES, the E-mini NASDAQ or the NQ. We have the E-mini Russell 2000 or the RTY. We have the E-mini Dow Jones or the YM. We have the Volatility Index or the VX. We have the U.S. Treasury bonds. The 30 years, the ZB, and the Ultra bond is UB. And we have U.S. notes, the TN, ZN, ZF, and ZT. All right, and for currency, some of the currency on the exchanges are the Australian dollar, the British pound, to 6A and 6B. Bitcoin is also a cryptocurrency. The ticker is BTC. Have the Brazilian real, which is 6L. Have the Canadian dollar, which is 6C. Ethereum, ETH. The South African rand, which is 6Z. The euro, which is 6E. And the Mexican peso, which is 6M. And I just want to mention, a lot of people, when they hear the word or the term Forex, they think about a scam, or they think that it's something illegitimate. Forex is simply means foreign exchange. So I know there are a lot of, well, I don't know, but I have heard that there are a lot of like multi-level marketing things associated. I don't know. I don't even know how it's possible, but Forex is a legitimate, future that you can trade. So don't be afraid of Forex. Just don't sign up for anything scammy, but don't be afraid of Forex. All right. Now for commodities, again, we have gold, wheat, which are GC, ZW, corn, ZC. We have the COMEX copper contract, which is HG, crude oil, which is CL, and live cattle, LE. All right, so now I'm going to explain points/ticks. So pretty much how you make money trading these. So if I'm trading one Russell contract, I can make $5 per tick. So in this case, the ticks are 0.1. So 1 point with the Russell is $50. So if I make half a point, which will be 0.5, of course, that would be $25. If I make 0.4, that's going to be 20. 0.2, no, I'm sorry. No, that's right. 0.2, I'm going to make 10. All right. I'm nervous, y'all. I don't know why, but I just am. So bear with me. All right. So anyway, if I trade the ES per tick, it's going to be $12. And the ticks are 0.25. So 2 ticks is going to put me at $25. 1 tick, as you can see here, is $12.50. All right. So let's go on to the Dow, or as the future contract would, is expressed YM. So 1 point is simply $5 on the Dow. So people that don't like math, don't worry about it. You $1.5, and that's it. All right. So when we are, thanks guys, I appreciate that. When we are trading the NASDAQ, 1 point is $20. So for every quarter of a point, I make $5 on the NASDAQ. Now, what I will say about the NASDAQ and the Dow is that they do move a little faster and they are a little more liquid. So that's something to keep in mind with them. And when we go to gold, it's similar to the ticks are the same as the Russell, but instead of $5 with gold, you make 10 per tick. So 1 point is $100. All right, and the ZB or the bonds, the 30-year bonds, 1 out of every 32. Okay, so 1/32 of a point is 32.50. So 1 point on the ZB is $1,040. But what you have to understand about the ZB is that it how can I explain? The movement is sort of peculiar. If you look at it, it's very if you pull ZB up on a chart, you will see that the movement is different. Like the way the candles look are different. So this is not an instrument that will move 100 points, 200 points, 500 points a day, like we see sometimes on the NASDAQ or the Dow. So moving on from there. All right. Now, I broke this down into the 3 basic, very basic components that you want to have when you are trading futures. These 3 things, you want to make sure you absolutely have these checked off before you press send or you short or go long on a futures trade. So first we have establishing your directional bias and determine the trade type, plan your trade and define your risk, and execute and maintain your trade. All right, directional bias. Determining the direction of price action is critical to setting up your trade successfully. Using multiple time frames to support your idea of directional bias can be a good way to find your setup and enter the highest quality trade. All right, so now we're going to look at the types of trades. Now, kind of like swing trading, I know swing trading can mean different things for different people. So the way that we use leaps when trading options, you can do a similar thing with futures, except when quad witching comes, that contract expires, which we are aware of, right? The contract rolls over. But you can keep a contract a full quarter. So a long term, that's something I would consider a long-term trade. You would chart this trade using the monthly, weekly, and daily time frames. This trade can stay on as long as quarterly to monthly and down to weekly. Then we have our intermediate term trades. Chart this trade using the daily, 4-hour, and hourly time frames. This trade can stay on as long as a week to 1 day. And then we have short-term trades. You will chart this trade using the 4-hour, 1 hour, and 15-minute time frames. This trade can stay on for several hours to a few days. So I did not include scalping or like really, really quick trades, because I think that is something that you do with time and practice. And to be quite frank, I can't inform you of that. So, okay, Brian said 31.25. Okay, I went and looked on the website earlier, but if I misquoted, thank you so much for correcting me. I appreciate you. All right, so I charted a few examples to share with you guys. So this is an example of a long-term setup on a monthly chart. So this is the NASDAQ, and what we are looking at is an entry in the month of January. So if you guys can see this, no, I know it's small, but hopefully you can see it. In December, if you remember, we had that a sell-off kind of in December, but then we had what people were referring to or were anticipating was a Santa Claus rally. Now, I don't know if that was fulfilled or not. I don't know what people's expectation was, but nevertheless, it couldn't break the high. So when you see that a candle cannot break the high and the next month is still struggling to break that high, that could be a signal that, okay, this downtrend might sustain. And if you look at the smaller note I put over here, look at all of these months starting in June. So from the beginning of the year, how do I make this bigger? From the beginning of the year to about May, we were kind of ranging in the NASDAQ. But then after June's quadruple witching, the market just ripped up. And you can see every candle closed above each other, except September, quad witching again. But then the next month, it closed above it. So when first of all, it started to pull away from the band, if you notice that. And yeah, it just couldn't close above. So that was a signal that the trend was wearing off. Okay. All right. So this is the same chart, but just on the weekly. So now we can see what it was doing on the smaller time frame. So on the weekly, it was still on the band, but again, it just couldn't break above it. We see that candle, that strong push down, and we got another push up the next week. But if you see where I highlighted, that was the last week of December that it did run up, but the first week of January gave a retrace. So you see that wick up, it gave a retrace, and that was really your prime opportunity to get in. But yeah, then it went on to decline, and it's been down ever since. All right, so now we're gonna look at it on the 4-hour. Oh my God. Okay, on the 4-hour, we see a clearer entry. So we see that it was declining for probably about a day and a half. Then you got to push up, and that's that green candle. So that green candle might give some people the impression that the downtrend was breaking, but I'm always going to look for a green candle to move impulsively or a really strong move. So when it didn't break the high or really even come close to the high, that is I don't want to say a definite signal, but that's a very strong signal that, okay, this might be my opportunity to get in. But then you see on the next, oh, this is the daily, y'all, sorry. On the next 4-hour, it went up a bit, but then broke back down. All right. So this is an intermediate term trade, and this is the daily setup, and this is on the ES. So kind of similar with the other one. That was in December. This actually occurred on February 10th. So we see that it was kind of ranging. Then there was a pop up, and if you look at where I highlighted, it did not break where it couldn't break above that red candle. So again, when you see something like that, that could be an indication that this is giving me an entry or that the downtrend is going to continue. So I hope it's making sense. If not, I'll try to answer some questions at the end. So I made a little note that I will look to get in around 4,690 because there was a little accumulation there. Oh my God. So yeah, that's why I would look to get in. All right, so now we're looking on the 4 hour. Can see it a little more clearly. So now you can see all these candles on this line. So that is telling me something, either if a candle breaks through this going up, I know that the trend is going to break. But if it can't, I would feel like it's safe to say that we're in a downtrend for right now. Now, remember, this is intermediate. So this could still happen. You could be in an overall uptrend and still take a futures trade to the downside, or an option trade for that matter, because it's not necessarily a long-term trade. What helped me was okay. But nevertheless, that's why I said I would get in. And also, I selected this trade to show you guys sometimes you're going to miss the best entry. So the best entry was, if you look at these three little candles at the top leading up. So, and then there was an up candle. That was the absolute best entry, but sometimes we just don't get it. So sometimes it's just a matter of being patient and waiting for the next best entry. So if you look to the left, I put that I'm looking for a strong close under 45.73 because of this wick here. So because of this wick, I want to see if the candle, since I'm in this trade, I want to see it break down and close underneath that. But I put that I would exit this trade around 45.64 because even though it did close underneath, the next candle was an up candle. So that would tell me for this kind of trade, just go ahead and take your profit. You made some, so just go ahead and exit at this point. And sometimes it really just comes down to, am I going to stay in and risk more, or am I going to be satisfied with what I have? All right. All right. So now this is a short-term trade. I absolutely love this trade because this is my favorite kind of setup. So if you look at my arrow, it says 210 New York session candle, great retracement opportunity to get in after strong push down in the London session. I would look to enter around 35,650. Y'all can't see me.
You supposed to see your screen?
It delayed.
Yeah.
It just went away.
Mm-hmm.
I'm so sorry, y'all.
Nah, you good.
Nah, you okay?
Okay. Let's see what's going on. All right, you guys, give me 1 second so I can pull it back up.
Good, you good. You was doing your
take
thing.
a deep breath, sis. Still doing good on time. You all right?
Okay. Let me open this back. Open it in my browser. I wonder why I just stopped like that.
They don't want to see us win.
Listen, man.
You
seen what direction Google and Zoom stopped been going.
Man, listen.
Hey, listen, speaking of Google, man, I had to take like 3 looks at that chart.
Man, listen.
I like Google too.
No, and that's what coming down the line too. Tough.
And people sleep on Google. Like we don't really talk about Google like that.
No, we don't. We don't.
People sleep on Google, man.
No, for sure.
Listen, and I don't like Excel.
From a cloud AI perspective, like, yeah, we real sleep on Google. You right?
Yeah. And shoot, even just the average, like they are advertising juggernaut.
Just think about it.
That's the advertisement platform.
I know for a fact we probably all at least use Google, touch Google at least once a day, like easily, if not more. Easily, like
every day.
Multiple times, right? So like,
what do it mean when you've been coughing for 3 weeks straight after Corona? Like, I'll be on Google.
Man, listen, boy, you be Googling the whole medical field, the whole MD. You diagnosing yourself. It's okay, sis. You diagnosing yourself. No, seriously though, we are sleep on Google, especially with it being in communications. It's just kind of like that out of sight, out of mind sector. You know?
Everybody automatically think of Facebook when I wouldn't touch Facebook stuff with a sick hand. You feel me? Like I'm not on that.
But Google though,
yeah. We see it now though, Candace. So whenever you get to your slide, you good money.
Yeah, you ready to start back up, sis?
All right. Sorry for that again. So what I was saying was I really like this trade because it gave you a great retrace and it was clearly in a strong down move. So I know that sometimes when you're in a trade and you see it going back up, you might think, okay, this is a reversal. But a lot of times it's just a retracement. So this is just one of those, examples that I think is very, very clear. And so if you see a trade or a candle like that, don't assume that it is a reversal. All right, especially if it doesn't close above that other candle. That's also something you're going to look for. If it closes above the other one, then that could give you an indication that it is reversing. All right. So for this one, I said that because on the left, where the wick was, I was looking for a strong push, and where that accumulation was, I was looking for a strong push underneath that. But since I didn't really get it, I said that I would get out here. Even though, as you can see, it did go on to drop further, but a lot of times it's really just going to come down to, okay, what am I looking to make on this trade? And do I want to risk what I did, what I have gotten so far? And I have learned over time that I need to just take my profit. It's not even worth risking. All right. So here it is on the hourly. So you can see that it went down substantially and then it wicked back up. So like I said, that was just the perfect entry. And when we look down where I said I would exit, it It was outside the band, but then it started to pull in, and then you can see a range for a little while, then did push down eventually. But yeah, I would definitely go ahead and look to take profit there, just because why not? Like, you have the money, so just go ahead and take it. All right, 15 minutes. This is it on the 15-minute. So you can see here that it was a very strong push down. And if I'm not mistaken, this candle, on the left, I think that happened at 10:30, and then it retraced some. So again, it's just a beautiful example of you didn't get in here, but the market giving you an opportunity of a retracement. All right, so let me move on because I'm only on the second part and I have 15 minutes. So all right, so things to consider when entering and exiting a trade. Economic news or any information the market will react to, time of day, significant levels of buying, selling, and accumulation. All right, information moves the market. Following institutional movement increases the probability that your trade will be successful and profitable. When economic indicators such as unemployment claims or jobs report, consumer price index, Federal Reserve meetings in minutes, earnings of major companies, international economic data, and more are anticipated, it is best to see how this info will impact the market before taking a trade. You can find a calendar of many economic indicators at forexfactory.com, and other reliable resources for this data is reported. For this data is reported to financial websites like CNBC and MarketWatch. All right, so this is just a screenshot of Forex Factory, and you see you have dates and time, or the times on a particular week of economic events. All right, so this is something that is critical that I don't think a lot of people necessarily think about when they trade futures, but it is essential to taking high quality trades. So if you look at the red, where the red is highlighted underneath the blocks, these are the best times to take trades. So if you are in Eastern time overnight, that's going to be between 1 a.m. and 4 a.m. during that's the London Open in Tokyo close. And of course, the best time to trade for us is going to be around 9 a.m. They say from 9 to 11, which is true. Most of the time, the market, the most liquidity is moving the first 2 hours of the market. And sometimes you do get an opportunity late in the afternoon, especially lately, but these are the absolute best times to put a trade on. It's not a guarantee that you're gonna, find your setup or that the market is gonna move 500 points, but these are the optimal times. So definitely keep that in mind. All right, and your plan is your friend. When the market is moving at a rapid pace, it's easy to be tempted to jump in wherever, but I'm begging you to never do this. At best, but unlikely, you'll get lucky and the trade will go your way. But if you keep a tight stop like me, you'll get stopped out repeatedly only to watch the market hit your level 80% of the time. That's just made up. I was trying to be funny. But or worse of all, you'll end up trading against the market and eventually end up blowing your account. All right, so don't do that. These are just my trade rules. All right. So I use Ninja Trader, and this is how you would set it up. You would select if you want minutes, ticks, or the other options, how many minutes you want to look at, how many days you want. You can pick the candle type, the color of the candles, and so on and so forth. Now, on the right, this is how you would select if you're going to sell or buy a trade. And I always use bid. I don't use the actual market because I think that's how I get the best price. All right. Now that you've entered a trade, set your stop loss at the appropriate place. Look for signs of a reversal and know the difference between a reversal and a retracement. Don't allow greed to get the best of you. Monitor movement of the smaller time frame for this type of trade, and when in doubt, take profit. Okay, so this is just an example of me monitoring a trade on a smaller time frame. So on the left, this is accumulation. So when I see something happen at a level of accumulation like this retrace, I'm not going to be too worried because I know that, okay, earlier in the day, there was accumulation here. So that's normal. Now, if I start to see candles go up and I see, let's say, so this is a 15-minute. If I see more than 4 candles, so an hour close above each other, then I'm going to say, okay, it might be time to get out of this trade, especially if it closes above that accumulation level, right? So if you look down, when it finally did get down, you can see that it met resistance here and it couldn't break the low. And then when it did pop, you see that the movement was much stronger than the candles previous to. So that would be your confirmation to go long. All right, when your target is met, I recommend taking profits immediately. But if you think it can still run, move your stop to your target or just above it. Just above the level is likely, if the level is likely to be retested. Sometimes though, trades don't go as planned, and you have to be prepared for this as well. Be firm about what you are willing to risk. Don't move your stop loss in the heat of the moment. It always backfires. Accept that you will not hit your target on every single trade. Celebrate the small wins. Accept that you will leave money on the table. Don't let a moderate to small win turn into a loss, and there will always be another trade. So please do keep all those things in mind, especially about moving the stop loss. Please don't do that. Ever. Ever, ever, ever. All right. It's inevitable that we will take losses from time to time. Keep your losses small. Please don't revenge trade after you take a loss. This means that you have lost objectivity and you can't make good decisions in this state of mind. Take a break after a significant loss. That way you can regroup and examine what went wrong. Know that you can always recover from a loss. And again, there will always be another trade. All right. So now in the last few minutes, I just wanted to see, actually, I'll just give the answers. So the best times to trade are from the beginning of the London session. So 1 a.m. to 3 a.m. to 4 a.m. Eastern Standard Time, and 9 a.m. to 11 a.m. Eastern Standard Time. And when is it okay to skimp on your exit strategy? And that is never, because you will end up losing your money. What is the minimum loss that can be incurred when trading futures? There is no minimum loss. You can lose more money than you actually put in. So always be careful. And what should you do if you're in a trade that looks like it might be reversing? So I would say look on a smaller time frame, and if every time the smaller time frames confirm it, I would definitely go ahead and just take profit. And what is the instrument symbol for the euro? And that's 6E. All right, guys, I thank you so much, and I apologize for the technical difficulties. I hope this was helpful to somebody. So let me say this: in the Facebook group, I dropped a document that will help you understand, like, kind of what MJ was talking about that week. Order blocks. I know he didn't specifically talk about order blocks, but more technical stuff that goes hand in hand with this. But because of time, I just couldn't go into it. But if you are in the Facebook group, definitely go look at that document. And happy Black History Month. Any recommendations for reading material? Yeah, that document that I put in the group. Thanks, guys, so much, and I really appreciate you. Mark and Jolene, thank you so much. I apologize. This was not on brand, but thank you so much for all you guys do. Tiva and AJ, thank you so much. And thank you, Cuzzos. I love y'all so much. And that's all.
Listen.
That was the sweetest little wrap up.
Listen, you better stop all that apologizing. They better be grateful for this knowledge that you just gave.
Free 99. Listen.
For real. No,
we are beyond grateful.
We appreciate that for sure. You know, futures is a complicated topic. It's not something that you can learn overnight. It's not something that you could just learn just straight from this episode. This is an intro. She gave us a lot of good information, a lot of information that, you know, even myself, I could now build upon, you know, and do some more research or start trying to paper trade and, you know, just getting more familiar with it now that I have some base knowledge. You feel me? So we definitely appreciate you, Kenneth. You know, you don't have to apologize for anything. You know, we all family. You know what I'm saying?
Evo, let me say this. I'm gonna come back and I'm gonna be on my laptop at that time. My laptop got messed up. That's why I was kind of late getting you the presentation and I had to do screenshots. But I'm gonna come back and I'm gonna bring more information and it will not be ghetto next time. Okay. I promise.
Listen, I don't have nothing. You see this? You see this place right here? This is one of my favorite places to eat. I don't have nothing wrong with ghetto.
That's when you pull up to get a 2-piece.
You feel me? You don't owe me nothing, but you know there are more Sundays in 2022. So if you want to come back on a Sunday, you are more than welcome. Just let me know when, what, you know, and I'll put you down. You know what I'm saying? Okay. So we definitely don't need no apologies. Your laptop was broke and you still showed up. That's all that mattered. You presenting from the phone in the car. Like, I'm cool with that. Listen, I'm a tap water baby. You don't owe me not a thing.
No Brita filter.
So we appreciate you, Candace, for real. That was legit. That was quality work. You know, you had to make some maneuvers, but it was still good work at the end of the day. So that's why I said you don't have to apologize for nothing. If you would have told me that your laptop was broke and you was going to be presenting from the car, I would have expected a lot worse presentation. I'll put it like that. So, you know, you did your thing. We appreciate you. I'm going to put the document link in there. She did post, I think she posted it in the Facebook already. So that's there for y'all. If y'all have any questions, you could always put them in the comments. You know, we go back, we review the comments. I'm sure Candace could take a look at them and answer anything. You know, if you do have a whole bunch of questions, like she said, she's going to come back. So we could always do another episode. You know, we might have other people start to expand on futures as well, since it is such a big topic. You know, we might have multiple where she comes back, might have somebody else come on, get a view, because there's different types of futures that you can trade, like the ZB, you know, the ES, all that. So every single one, they have different types of traders that have different types of strategies. You feel me? So if y'all are interested in that, just let us know, and we'll keep bringing people on that can give more knowledge about that, since it is like one of the key investment tools that people do besides stocks and options. Next in line is futures. You feel me? So we definitely appreciate y'all showing up. We appreciate you, Candace. AJ, what you got for this week?
All right. So for this week, let's jump into the earnings report for this week. All right. So on Monday, we got Zoom reporting earnings. So that's one I'm looking at for Monday. On Tuesday, I'll be looking at Salesforce, SoFi, Badu, Target, and AutoZone. Okay. So that's Tuesday's lineup we're looking at. On Wednesday, we got Dollar Tree, Snowflake. Okay. Those are the two we're looking at for Wednesday. And then come Thursday, we got Best Buy, Costco, Broadcom, Marvell, Gap, Kroger. All right. Also coming in on Thursday. I also believe Okta, I think I missed that one. I think that's reporting on Wednesday this week as well, if I'm not mistaken. So those are some of the earnings that I'm looking at for this week. In terms of conferences, there's a variety of conferences across a variety of different industries this week. So make sure you're paying attention to all of the industries and looking at all of the sectors. But just to point out a couple, the Mobile World Congress Trade Show. So, we love tech, right? There's investments in mobile, 5G, cloud computing, and AI updates. All right. Also, another big one that I'm looking out for, DraftKings has Investor Day coming up this week. All right. So they're going to be talking about the total addressable market for sports betting and what they're looking at in terms of profitability over the next few years. So that's going to be exciting to see as well. And then on the economics front for the week, we got so basically, we all know what's going on with Ukraine and Russia, right? So basically just looking at the global markets, energy prices, and the commodities, right? Just seeing how things are being affected, how prices are being affected by what's going on over in Ukraine. Wednesday specifically, though, we have the OPEC meetings, okay? So be on the lookout for the OPEC meetings, as well as Fed Powell starting his first testifying speech, all right? So he starts his first speech on Wednesday. He follows up with his second one on Thursday. All right. Also, the Beige Book. I know we talked about that a few times on here, but if you don't know, go home, do your research on that, because that also comes out on Wednesday. And then last but not least, on Thursday, we get unemployment, the unemployment claims. And then, like I said, Powell finishes up his second day of speaking. And Friday, we have unemployment rate announcement numbers. Okay. So those are just things looking up for the week ahead. So make sure y'all are keeping your head on a swivel. Make sure you're getting confirmation before jumping into trades. Make sure you have a plan, follow your plan. It's a lot of volatility, a lot of uncertainty going on in the market. So just make sure you're being smart out here, because we can't be giving away $1. Okay. We can't give away $1. All right. So that's the week ahead.
Appreciate that, AJ. That's a fact.
No problem, bro.
We're not giving away nothing.
Bro, nothing. Like,
It's for the giveaway.
Nothing.
Especially not during Black History Month. Come on, now. We got too much that we need to gain back.
Man, listen, you know what? What's funny was I felt like I was even more careful this month because of it being Black History Month. So I need to be like McDonald's, like at 365. Like I need to be having this mindset. If my ancestors ain't taking this trade, listen, I don't need to be in that trade. Like I need to have a different mindset about this generational wealth, because this is serious, bro. Like this is really serious.
We still playing catch up. We got a lot of work to do. We ain't got time to be giving.
We ain't got $1 to waste, bro. Like we really don't. We really don't.
Like Kenneth said, don't move that stop.
Don't
not move that stop. You gotta keep it.
That's right the worst decision.
Yeah. So
yes, bro.
But man, we're not gonna hold y'all too long, man. Make sure y'all do your homework. Go back and watch the fundamental, supplemental Sunday videos, the technical supplemental Sunday videos, the economics supplemental Sunday videos. Shoot, these last few episodes, Mark been giving it up from an economic standpoint. So if you feel like you still not understanding economics in the market, you ain't been paying attention enough, because all of us, me, AJ, Jolyn, Mark, we've all made it a point to make sure that these dots are being connected. So we need y'all to really take the time to do the extracurriculars that you got to do to understand and be able to process the information properly, so that you can apply that to the market, because even though it has been crazy, it's opportunities. Even if it means I'm not even telling y'all to buy options. Even if it means finding a company that you like, that is being undervalued in this economic environment, but they have the business model and they have the resources to be successful once we come out of this economic cycle that we're in. Start averaging into that. You feel me? Put something to the side for your kids. If you think that the company that you like, you don't have enough time maybe in the next 5 years, put some to the side for your kids for the next 15, 20 years. That's what I've been doing. I put more money into my kids' stocks since 2022 started than I have in options, because I'm not a scalper. You feel me? I feel some of y'all. It's not an environment for everybody. For me personally, I don't got time. I'm gonna either have to buy a 2024 leap, like at the money, or like right out the money and go do my thing, which I'm not trying to drop that much bread right now, or I'm gonna just have to buy the stocks. So I've been buying the stocks. TSM, you want to flirt with 100? Yeah, come on over here.
Right.
SMH, you want to come down to the 250s? You come over here too.
You're gonna be back at 300 someday, right?
You know what I'm saying? So you use the resources you got, find your price targets, find your entry point, and start averaging into it, so you're at least getting some exposure to these prices. Because if this does be in a bottom, or this does be in a low, where you look 6 months from now like, dang, I should have bought some more back then, you at least got some exposure to where you ain't just miss out on the whole play. You caught some shares, you caught some, stuff that you needed to be able to say like, all right, cool. I used my knowledge. I didn't just watch it pass me this whole year. I was able to use my knowledge, set my kids up, set my retirement account up, set my IRA up. You feel me? So that's all I want y'all to do, is just use it. We're not here to teach you just so you could watch it and watch everything go by. Use it. You feel me? But I'm not gonna preach too much. We gonna get up out of here. Thank you, Candace. I know she had to go, but we definitely appreciate you. No apologies needed. AJ, did you have anything else?
Y'all go and learn what Swift is. Just go and learn something new with what's going on. Q made a good point about that, right? Like sometimes it ain't about just buying and purchasing, it's about taking the opportunity to learn, right? Why you can't be buying and stuff, preparing and, understanding the process and just loving the process. Just learn something. It's okay just to learn sometimes. You don't have to always be in the market and buying stuff. So take a moment and just learn something new about what's going on and how it does affect us economically. I agree.
That is a fact. Definitely learn what Swift is. Pay attention to this Russia, Ukraine stuff, because, the stock market is affected by global, Mark has always told us that we'll be so focused on America when conflict could be happening overseas that's going to affect our money in the U.S. market. Right. So, learn what Swift
or commodities is, or energy.
Learn about commodities. Why has steel and commodities been up?
And wheat, right? All of that.
Tell me why has that been up? Why are cybersecurity stocks going up? Yeah, it might seem obvious, but dig deeper than cyber attacks might start. Dig deeper than that. Why? For real though, like what companies? Why is people buying these stocks? You feel me? Why did Zscaler sell off during a time like this when there's supposed to be cybersecurity is the play? Like start learning those things so you can have an edge in the market, and you not just following, what everybody knows. Everybody knows it's a war, everybody knows, you feel me? Inflation is high. Like start learning the stuff that everybody ain't gonna take the time to really dig into. That's where you're gonna find the opportunities that everybody ain't there yet.
Looking at exactly.
So you already set up. So by the time they get in, you done already 3x, and they just looking for a 1x. You know what I'm saying? You taking profit when the party about to start. You feel me? So outside of that, y'all, have a good rest of your Sunday. Have a good week. Take care of yourself. Take care of your kids. Call your mom.